Hello guys, the stock market is booming, the real estate market is booming, Amazon opened a new grocery store, Walmart is now part of the fight for TikTok, there are a lot of IPOs coming up this year and a lot of companies reporting earnings next week. I will talk about all that and more in today's video, so please smash that like button and subscribe since it really helps my channel out. What a rally! The S&P 500 ended the week up by 2.63%, the Dow Jones up by 2.05%, and the Nasdaq up by 1.19%. Because of this rally, the market posts one of the strongest July-August rallies in history as hazard after hazard melts away. It is impressive how the stock market has been recovering. At the beginning of the year, we had a huge drop due to the pandemic and people panicking selling since we actually didn't know how the pandemic was going to affect each and every industry. Then we started recovering and really fast we got to all-time high with a V-shaped recovery due to the optimism in people seeing that the economy was reopening and the big companies were not getting that affected, and also the Fed bailing out the stock market. Something that I've been noticing lately is that industries that got hit really hard, such as the airline industry and the cruise line industry, have been recovering a lot in the last month. As you can see, companies like American Airlines are up actually 21.56%, Delta 28.27%, Royal Caribbean a whopping 39.4%, and Carnival Cruise Line 20%. All this within a month, which tells me that people might be being really optimistic about the fact that maybe things might go back to normal sooner than expected, or that we might have actually found a type of cure or vaccine for the illness, or might be the Fed bailing out the stock market again. Obviously, this caught my attention because even though American Airlines is cutting 19,000 jobs in October when federal aid expires, investors seem to not care about that at all. Yes, the stock dropped almost 3% after those news, but it went up 6.25% the next 2 days. So that is something that you might take into consideration. Now, the real estate market has been booming as well. The real estate market tends to see a slowdown during summer, but that is definitely not happening this year. The market has been moving a lot, and this might be because of the new normal of stay at home. Here in Miami, we are getting a lot of people from states like New York looking for a house, and also a lot of people that used to live in an apartment are moving to a house since working from home might be the new normal, for at least until the end of 2021 in several companies. Also, people are taking advantage of low interest rates, which are at all-time lows, and if it stays like that as the Fed expects to, we might see a lot of movement in the real estate market. So if you are looking to buy a house, this might be the perfect time to do so. Now, Amazon decided to expand their grocery business even more with their first fresh store in Los Angeles. Not only that, they have other 3 locations that are currently being used as kind of a warehouse for online order fulfillment, but that could easily open to the public whenever they want. This store will be a high-tech equipped with carts that will allow customers to keep lining up at the register. We'll also have a Lexus display around the store where people could ask her to help them locate any item in the store or even for suggestion on what to make for dinner. In my opinion, this is a huge expansion for the company, and also I think that they bought Whole Foods 3 years ago to start collecting tons of data and then be able to open these fresh stores. Still, according to Amazon, these fresh stores will be offering a variety of products at lower prices points than Whole Foods. This is exactly what I have always said, that Amazon is one of the best, if not the best company on earth. They have everything: grocery stores, online shopping platform, technology, advertising, and I mean, they are only missing a kind of a travel company, I think. Now, Walmart. They enter into the fight for TikTok. At this point, we all know that Oracle and Microsoft were already fighting to buy TikTok, and now Walmart has decided to partner with Microsoft to acquire TikTok. The way TikTok has integrated e-commerce and advertising capabilities in other markets is a clear benefit to creators and users for those markets. We believe the potential relationship with TikTok US in partnership with Microsoft could add this key functionality and provide Walmart with an important way for us to reach and serve omni-channel customers, as well as grow our third-party marketplace and advertising business. We all know that e-commerce and online advertising has been booming for years now with Facebook, Google, and Amazon. Obviously, all these companies like Microsoft, Oracle, and Walmart have noticed that huge growth advertising can provide to their company since e-commerce has been growing and growing even more every single year and could help them enter into that advertising competition. It is not a secret that TikTok is huge and has caused a huge impact here in the US. Even though Facebook launched Reels, which is literally the same thing as TikTok but inside their Instagram app, I think TikTok is still huge and still has a lot of potential to grow. To be honest, if you ask me, I really want TikTok to decide to sell to Microsoft and Walmart instead of Oracle, but that's just my opinion. As many of you may know, there are a lot of good IPOs coming up this year. We have Airbnb, which I posted a video talking about it, and I will leave it right here. Then we have Palantir. Palantir is a software company based on data analytics. According to this, they were targeting a valuation of $26 billion or more last September. Even though their revenue increased 25% in 2019, they lost $588 million in 2019 and $165 million for the first half of 2020. Then we have Ant Financials, which is an affiliate company of Alibaba. At this point, it is the highest valued fintech company that has been disrupting the banking industry in China. It is coming up with a valuation of $200 billion. They own Alipay, which is an online and mobile payment platform that handled $15 trillion in transactions in 2019, which, believe me, it is a lot. In China, they use Alipay for basically everything. The thing is that they are not going public here in the US. They are going public in Hong Kong and Shanghai, but apparently 3 of the biggest US banks are actually sponsoring the deal, and these banks are Citigroup, JP Morgan, and Morgan Stanley. I will do a video on Tuesday talking more in depth about these IPOs, and if you would like me to add any other IPO to the list, let me know in the comment section below. Now, last week we had companies reporting earnings, but the one that impressed me the most was Salesforce. First, the Dow Jones indices said that Salesforce will replace ExxonMobil in the 30 stock Dow Jones, which is huge, and then they reported earnings. As you can see, their stock went up more than 27% after they reported earnings. They reported earnings of $1.44 per share, where analysts were expecting $0.67 per share. Then they reported a revenue of $5.15 billion, beating analysts' expectations by a lot as well. They saw a growth of 29% in revenue year over year. In my opinion, this is pretty impressive since they are constantly seeing a huge growth in the revenue year over year. Now, next week we have Zoom, DocuSign, Macy's, and more companies reporting earnings. First, Zoom. We all know that most of their growth this year has been due to the pandemic. People were sent to work from home and kids to see online classes. Obviously, Zoom was one of the companies that benefit the most from the pandemic. Analysts are expecting them to have a growth of 191% for this year and only 25% for next year. In my opinion, they will be able to beat those expectations since literally Zoom is part of everything. Every birthday, wedding, graduation, baby shower, everything. And that is definitely helping them with their growth. My concern about this stock is what will happen after people are asked to go back to the office. In my opinion, a lot of companies will notice that they are able to work fine from home and could let their workers choose to go to the office only when they needed to, and that could definitely continue benefit Zoom. The problem comes when companies decide to start working from the office again as it used to be before. A lot of them could cancel or lower their Zoom subscriptions and they could get really affected. We also have to take into consideration that they are not the only ones with this kind of platform. We also have Teams, Google Hangout, Skype, and more. Then we have a company called DocuSign reporting earnings next week. This is another company that has benefited from the pandemic. A lot of companies already used to use this technology before, but because of the pandemic, people started adding it to their companies mainly because they could not go to the office or any place to sign important documents. Analysts are expecting them to have a growth of 35.20% in revenue this year and 28.30% next year, which is kind of doable for them since I don't see a slowdown for the company anytime soon. since their technology is really innovative, and I think that a lot of companies will continue having this service, or even new companies will start adding it to their company. I hope you enjoyed this video. Please smash that like button and subscribe since it really helps my channel out. Thank you and see you next time.